Welcome to my YouTube channel. Today, we're diving into a mind-blowing question: is Islamic banking the future of money? We're talking about a financial system that challenges everything we know about interest, profit, and fairness. A system built on ethics, real value, and shared risk, not exploitation or endless debt. It's reshaping economies, gaining attention across the world, and might just hold the key to a more stable and honest future for global finance. So stay tuned, because what you're about to hear might completely change the way you see money forever. Imagine a world where banks don't profit from your debt, where money serves people, not the other way around. What if that world already exists? You ever stop and think about how strange the modern banking system actually is? Like, we've all just accepted that debt is normal, that interest is the price of existing. You borrow, you owe more; you save, they pay you crumbs, and the entire global economy is built on this system that kind of feeds off itself endlessly. But then I came across something that flipped the script: Islamic banking. Now, before you tune out thinking it's something overly religious or complicated, hang on. The core idea is fascinating. It's money without interest, which sounds impossible, right? But that's the point. It's a completely different way of thinking about wealth, value, and fairness. Instead of charging interest, Islamic finance is built on risk sharing. If a bank funds your business, they don't just lend you money and sit back waiting for payments. They actually share in your success and your losses. That's wild, because it's based on ethics, not just profit. It's not about making money from money, it's about creating value, about keeping wealth tied to something real: trade, services, work. In a world where money has become digital smoke, just numbers on screens, that's refreshing. And get this, it's growing fast. Countries like Malaysia, Saudi Arabia, the UAE, even Western financial hubs like London are investing billions into Islamic finance. Global institutions are watching, studying, trying to figure out how this system stays so stable when others crash under speculation and greed. Because think about it: when the 2008 financial crisis hit, when crypto imploded, when banks failed, systems based on ethical finance were the least shaken. Why? Because they're not built on gambling or endless interest cycles. What's even crazier is how modern it feels. You could almost call it sustainable finance. No exploitation, no hoarding, no interest driven inflation. It's literally designed to prevent economic collapse caused by greed. And in an age where people are losing trust in big banks, where the dollar's power is shifting, where digital currencies and AI are redefining wealth, Islamic banking feels like a window into something new. Or maybe something old, but wiser. It's not just about money, it's about values, about asking, can we build a system that works for everyone, not just the top? Maybe the future of money isn't about how fast we can make it or how digital it becomes. Maybe it's about how honest it is. The idea of an interest-free financial system built on ethics and fairness challenges the very foundation of how global economics currently functions. In traditional banking, money is treated as a commodity that can be sold or rented out through interest, leading to a cycle of profit accumulation without the creation of real value. An interest-free model rejects this idea, grounding itself in moral and ethical principles that prioritize justice, transparency, and balance in financial dealings. In this system, money is viewed as a tool for trade and investment, not an instrument of exploitation. The prohibition of interest, known as Riba, is not simply a religious directive, but a safeguard against economic inequality and instability. When institutions cannot profit from someone's hardship or misfortune, the focus naturally shifts toward genuine economic growth and partnership. Ethical standards guide every transaction, ensuring both parties share risk and reward fairly. It prevents the accumulation of wealth in the hands of a few and encourages the circulation of money across all levels of society. This model emphasizes trust, social welfare, and human dignity, suggesting that a stable economy must be built on compassion and responsibility rather than greed. When fairness becomes a built-in mechanism, financial relationships become more transparent, communities thrive, and individuals experience empowerment rather than perpetual indebtedness. An interest-free banking system serves as a reminder that economic progress should align with moral progress and that wealth without ethics can never create sustainable prosperity. Risk sharing replaces debt-based lending in this framework, creating an entirely different kind of financial relationship between institutions and individuals. In conventional banking, the lender provides funds, charges interest, and assumes almost no risk. The borrower carries the burden of repayment regardless of the outcome. In contrast, risk sharing ensures that both parties have a stake in the success or failure of an enterprise. When a project succeeds, profits are shared. When it fails, losses are distributed according to pre-agreed terms. This structure fosters partnership, accountability, and a genuine sense of collaboration rather than a predatory dynamic. The lender becomes an investor, not a collector, aligning interests in a more humane and realistic way. It eliminates the fear of unmanageable debt and financial ruin, encouraging entrepreneurship and innovation with moral grounding. Businesses are supported not just financially but morally, as banks evaluate the real potential and social value of each project. This also leads to more cautious, informed decision-making since both parties have something to lose. The share-risk principle promotes stability and discourages reckless speculation, helping build economies that are resilient rather than fragile. It cultivates a culture of honesty and responsibility where finance becomes a means of partnership instead of oppression, changing the nature of capitalism itself. Real value creation over speculative profit defines the backbone of this philosophy. In a system driven by speculation, financial growth often occurs without corresponding increases in production, employment, or tangible benefit to society. The result is artificial wealth, bubbles that expand and burst, leaving instability behind. By anchoring finance to real assets and services, Islamic banking ensures that money represents genuine economic activity. Every transaction must be linked to something productive: trade, agriculture, manufacturing, or service. It's a system designed to prevent wealth from becoming detached from real life. This approach transforms finance into a tool for progress rather than manipulation. When profit is tied to actual value, it encourages sustainable investment, innovation, and long-term development. It prevents reckless behavior that fuels economic crises and makes finance more grounded, transparent, and beneficial. It also discourages industries that exploit or harm society, redirecting capital toward ventures that create employment and enhance welfare. The focus on tangible assets ensures that growth is measured by what truly benefits humanity rather than what merely looks good on paper. In essence, value creation becomes a moral responsibility, aligning economic ambition with ethical purpose, building a healthier and more sustainable global economy. Proven stability during global financial crises highlights why this system attracts growing attention worldwide. When the 2008 financial crash exposed the weaknesses of conventional banking, economies based on ethical finance remained relatively unaffected. The reason lies in the very design of the system: prohibition of interest, avoidance of excessive risk, and insistence on asset-backed transactions. These mechanisms prevent the creation of inflated financial products and speculative derivatives that often cause economic collapse. Since Islamic banks deal primarily with real goods and shared ventures, their exposure to financial volatility is naturally limited. They do not gamble with deposits or trade in synthetic instruments, which makes them structurally resilient. This resilience isn't accidental. It's the result of a moral architecture that prioritizes long-term stability over short-term gain. The emphasis on fairness and transparency builds trust between banks and communities, further strengthening the system. Investors and depositors are assured that their money contributes to productive activity rather than speculative bubbles. When global systems fail due to greed and manipulation, interest-free finance continues to function with integrity because it's built to protect people, not exploit them. This consistent performance during crises serves as evidence that ethical frameworks can produce economic strength, not weakness, and that values can coexist with financial success when structured intelligently. Rapid global growth and adoption, even in the West, demonstrate how universal these principles are. What began as a system rooted in faith-based ethics has evolved into a globally respected model for sustainable finance. Major financial centers like London, New York, and Singapore are incorporating Islamic finance instruments into their markets, while countries like Malaysia and Saudi Arabia are leading innovation in this field. Global investors are realizing that a system based on stability, fairness, and transparency isn't just morally appealing, it's financially smart. Governments are introducing regulatory frameworks that accommodate Sharia compliant investments because the demand is growing across cultural and religious lines. Western corporations are issuing sukuk, or Islamic bonds, to attract ethical investors seeking alternatives to conventional debt. Universities and think tanks are developing courses and research programs to understand its mechanisms better. This expansion shows that the model transcends religious identity. It's a financial philosophy with universal appeal. Its success lies in combining profitability with principles, showing the world that capitalism doesn't have to be ruthless to be effective. As inequality and financial distrust continue to rise, the demand for systems that restore humanity to money will only grow stronger, pushing Islamic banking from niche concept to mainstream solution. A values-driven alternative for the future of money introduces a revolutionary shift in how societies perceive wealth, responsibility, and progress. In a world where money has become largely digital and impersonal, ethical finance reconnects wealth to morality. It insists that financial success cannot come at the expense of others and that every gain must reflect contribution, not exploitation. The core principles, prohibition of interest, promotion of trade, shared risk, and social justice, form the foundation of a fair economy. It humanizes banking, turning it into a system of cooperation rather than competition. This model rejects the obsession with endless growth and redefines progress as balance, equity, and stability. In a future where digital currencies and automation are changing everything, this value-based approach could provide the moral anchor that technology alone cannot. It speaks to the growing desire for transparency, ethical accountability, and community well-being. The future of money, therefore, might not be about faster payments or virtual assets, but about re-establishing trust and purpose in financial systems that have long forgotten their moral roots. So when we step back and really look at it, maybe this isn't just about banking or money. Maybe it's about the kind of world we want to build. A world where profit doesn't come from pain, where success isn't measured by how much you take, but by how much you give back. This idea of value-based finance, of money tied to ethics, forces us to ask some big questions. What if our financial systems actually served humanity instead of controlling it? What if growth wasn't built on debt, but on partnership and trust? That's the real challenge. Because the future of money isn't just about new technology or digital currencies, it's about rediscovering fairness, balance, and purpose in how we exchange value. Maybe the next revolution in finance won't come from Wall Street or Silicon Valley, but from a system that's been quietly practicing integrity for centuries. And if that's true, then maybe Islamic banking isn't just an alternative, maybe it's a glimpse into what the future of money should look like.